Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on GameStop, ticker GME. Now we have seen that it closed up around 7.5% today. It did do a massive gap, at least pre-market, but during the day it did end up selling off, and now we're going to go through kind of why this happened and our targets going forward. So the reason this happened was kind of just on NFT hype, but really it seems to be short-lived. It seems to be selling off right away. If we quickly go on to the today chart, or actually we'll go on to the 1 day 1 minute, we can see it ended up having a massive gap, at least after hours pre-market, of around 33%, but you can see the majority of that gains was given back and only closed 7%, which kind of tells us right away as well that the news was kind of short-lived. But as always, we will go onto a clean daily chart so we can see is there any gaps that need to be filled, because these will provide us good gap fill areas and we can use these as targets. But looking actually straight at GameStop, there doesn't really seem to be any gaps. It seems to be more of a slow mover nowadays. So yeah, we're not really seeing those massive moves where there's any gaps really to be filled. You can look at $130, and that is essentially a gap fill. However, it's not a very obvious one, so it's not something we're really going to mark on, but you can see how it will react coming into that level, because it still will most likely have a reaction, just not a very big one. For this then, we will then go on to the standard deviation charts, and we can actually start seeing our buy entries, where we would look to be long bias and where we'd be looking to maybe sell off a position if we were long. Now what you will see pre-market as well and after hours is that it did come into statistical mean, and that's most likely why the sell-off kind of started. Was GameStop moved to its statistical mean on some sort of hype. It came into that statistical mean. Anyone kind of long there, if they were currently in a losing position, or they kind of scalped it, or they're just looking to kind of get out of the trade, this is the level they're going to be doing it. Because it is statistical mean, stocks always trying to reverse that statistical mean. So you know, when a stock's there, then it's more of a gamble whether it will go up or down. So if people are trying to get out of a position, they're going to try and do it as close to the statistical mean as possible. So that's exactly why we saw GameStop sell off here, and it's a common occurrence you tend to see quite a lot. But you can see that it has already gone back to that first deviation, which we would usually consider a low risk long. And so yeah, between kind of 147 and 144, that is our typical low risk long. But as you can see, we came into this level, we got a small bounce, but it has kind of ultimately gone through, retested, and kind of confirmed the level, which shows us more that we're looking at it more bearish. And as we can see as well, for the last kind of 2-3 weeks, we have been stuck on this first deviation. When we see this, we instead tend to wait for it to break down to that next deviation, because 9 times, or probably about 8 times out of 10, it will instead end up breaking down instead of bouncing up. So because of this, we will then be looking at our next target or next buy or low risk long, which would be $113.94. Also, you can consider $100 a level, because it will be that big psychological level where you would expect some sort of movement. But overall, we would expect GameStop to continue selling off. And then if you're looking for scalp longs, or maybe even swing trades, these are the levels we would be looking to do it. I mean, obviously, if you're looking to invest in GameStop, it would be those same levels, but I don't imagine many people are really looking to invest in GameStop, especially at this price. But either way, $113.94 and around $40 are all considered our low risk long. So when it comes into here, we would expect some sort of a bounce. Doesn't mean it's going to go, to $200 off these levels, but we would expect at least a bounce to the next deviation. But we would still expect at some point for the stock to reverse to a statistical mean, and that's why when we see stocks at third deviations or even second deviations, we tend to go quite heavy on the positions, because we know that these stocks are going to try and reverse to that level. So these are kind of our low risk longs, and then where we'll be looking in profits, again, as GameStop's not something as fundamentally strong as say a Facebook and Apple, really any of the majority of the stocks we do analysis on here, like BlackRock, we're not going to be giving as optimistic targets as usual, which is usually statistical mean. Obviously on a stock like GameStop, where it's very hyped, one bit of news has to come out and it will jump 20%. you're probably going to get there eventually, but it's just a lot riskier. So depending on your risk tolerance, again, you may actually end up holding through that. But when we're looking at a stock like GameStop, same with something like AMC, we instead tend to just use our next deviation as a target. For example, if we're getting long at 113, we're most likely looking to lock in profits around 140. We're not looking to hold to statistical mean at around 175, just because it's not as likely as in something like a good blue chip stock. And again, if we're getting long at 94, then our target's going to be 113. If you're getting long at 83, you can use 94 as a kind of a day trading target. If you're looking more for the swing, then you can probably still look for that 113 reversal. And again, if it continues all the way down to $40, which is not something I really see happening in the near future, but if it does, then again, $83 would kind of be that target. If you are getting long in this area, which is kind of risky just because we're consolidating on this level, so more likely to break down, but if so, then again we would kind of just have a target of statistical mean, and that's kind of where we would look for. Again, if GameStop though does for some reason end up breaking through 205, yes, it's the first deviation on the 4 hour, but as it's statistical mean on the daily, we're not going to be looking to short this level. It's just an area, if you are long for any reason, probably a good area to be looking in profits. However, as we get past kind of the 235 and upwards, so the 235, the 260, the 313, the 270, the 265 kind of level, all of these levels are considered low risk short. So if the stock comes into this level, and you're looking to get short on it, these are kind of the levels that we would look to be doing it. But really, that is the overall breakdown on GameStop. So I hope you enjoyed the analysis on it. If you did enjoy, don't forget to drop a like and subscribe, and hope to see you in the next one. And that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money, okay.